Hi everyone, and welcome to this week's macro outlook. Okay, so as usual, I'm just going to talk about sort of a little bit about the markets and the economy. So let's start and have a look at sort of what happened last week. So indices went on once again to make new record highs. Some of the Dow finished a little bit off that, but Nasdaq definitely up there again. And even gold rallied $50 on Friday to close at 2,091. But the USD, well, it just remains range bound at the moment. It's looking for direction. Again, it's just negatives and positives on that. But I think that maybe all the employment data coming out of the US this week will perhaps give it a bit more direction. Okay, and then Bitcoin just missed out on 65,000. It eased a little bit off on the last couple of days of the week, but yes, I mean, it's the first time it's been up there for at least a couple of years. And oil rallied, and that traded above $80 for WTI, which was the first time since last November. So all in all, a bit of a bullish week for most things. So where should we go first? Let's look at the Eurozone for a change. So unemployment hit a record low of 6.4%. And you know, it's surprising considering their weak, stagnating economy, really, isn't it? But it just seems that there's, you know, everyone says, oh, you know, there's so many people on the planet, there's so much immigration, but when you look at it, you know, where are all the workers gone? I mean, it just doesn't seem really, even with banks and tech shedding staff, they just seem to still be getting absorbed back in, or they're all starting their own companies. And of course, you know, with that sort of media attention on migration, as I say, and that's sort of just around in lots of countries, not just Europe, it does seem strange that unemployment is not higher. On the same sort of thing, I suppose keep an eye on wage demands as well, because with unemployment so low, you know, it's still keeping that squeeze on. So if firms are struggling, they're going to have to continue to pay a little bit more at the moment, even though inflation's calmed down a lot more than it was. But I think that's going to be a key point next week, really. Even for the ECB meeting, you know, because they're using that as one of their metrics and just looking, obviously, at wages. Because, you know, increase in wages, increase in demand, increase potentially in inflation as well. And, you know, so here we go. It's about when are rates going to get cut again, or, well, cut to start with. You know, it just seems as though it's sort of really just moving the dates back and back. You know, inflation's still not down at that 2% where central banks want to see it. Part of that is because of the wage demands. And even the Eurozone inflation fell less last week than was expected. I mean, the headline was down to 2.6, but the core was still at 3.1, which is, you know, not even close to the 2% that they're looking for. And of course, as I've said before, I keep saying that the closer it gets, the harder it is to achieve that 2%. This week, as I just mentioned, we've got that US employment data coming out, and I think now that NFP should start to sort of reflect the true employment situation with those sort of seasonal hires fading from the data. But it does seem that sort of part-time employment is making up most of the new hires that are coming through from the States and elsewhere. Something to look for this week is Powell's testimony before Congress, and just expect a little bit more of an aggressive grilling from the panel. And the reason for that is because it's election year. They want to impress the voters because obviously they want to get back in. In the UK, the Chancellor's going to deliver the spring budget. A few little giveaways. I'm not holding hope for too much from that. China has its annual two seasons meetings. That's for their annual economic targets to be set, and that would be a key focus as well. They obviously continue to try and boost their economy, but the growth target's likely to stay around that 5% level, and they will also release inflation and trade data. Australia will release GDP, and Bank of Canada, you got their rate decision as well. So in the US, data last week was mixed, but there was nothing seemed to stop the bulls pushing the stock market higher for the moment. And of course, it's election year in many countries, so sitting governments will be happy to see the stock markets up. And of course, they'll be happy to see the central bank start to cut rates before those elections as well. Inflation still sticky, and it keeps pushing those rate cuts further down the road. For me, I still expect June to be the earliest, although ECB could be slightly earlier. It won't be this week, pretty sure of that, but maybe. Of course, they've got to weigh up to the potential for a recession or a deeper recession or a shallow recession against really sort of getting to that 2% inflation target that they've set. And again, does 2% make sense for an inflation rate? And of course, if you look at the history of that, that was started in New Zealand. Geopolitical tension remains, with Biden sort of hopeful of a ceasefire between Israel and Hamas. Houthi sank a UK vessel last week, and again that's going to deter even more ships from using the Red Sea shortcut. This is going to sort of continue to increase transport costs, delay deliveries. And I think another point with Biden, or just in general, geopolitically, is that there's pressure on Israel to agree to a Palestinian state just to sort of just put an end to this war that's going on there. And talking of wars, Russia is gaining ground just due to their weapons advantage, really, over Ukraine. Ukraine needs money and, substantial rearmament as soon as possible. Okay, so talking of elections earlier, so Americans see Biden as too old for a second term. And of course, there's the odd questions about his mental state as well. But then many others see Trump as too dangerous. I think it just sort of demonstrates how politics is shocking in many countries, not just in the US. But when they're the best two candidates that the US can muster, it just seems that it's still all about the business or businesses, because they seem to hold the influence of who is sort of potentially going to be the president in many countries, or prime minister. Okay, so now we're in March. Winter seems to be passing as almost a non-event in Europe again. That has prevented inflation from spiking. But again, this is going to change, where the attention moves now from energy to food supplies. With this global warming, it's producing record temperatures last year. The chance of it sort of maybe even hotter and higher this year. But it's just making it harder to grow crops. And it's going to get to the point where some countries may have to sort of consider sort of revising what crops to produce, just because of the change in temperatures and climate in general. On a final thing, Apple has abandoned their ambition to build EVs. So that's pretty much it for this week. So I hope you have a great week, and also hope that you sort of keep listening to the services I provide and such like, and then stay with me for part 2, where I do some chart analysis as well. So hope to see you in a minute. Now I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that, because that will accelerate your trading and your performance. And then there's a 1 week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And if you've got that inner trader, we'll find it. And now that does also include a free trading challenge. Then I do a flexi masterclass, which includes 6 weeks of guided learning. They can be split up. You don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market, and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers, and as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice, and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part 1. I hope to see you in part 2, where I'm going to do some technical analysis.